Hello, fellow traders. 'Tis I, TheRumpledOne. It is Wednesday, November the 29th, the year 2017. Right toolbox, wrong job. Oh, I guess you guys wondered what happened to me yesterday. I had to do some traveling, had a meeting out of town, so I had to leave early and didn't get back till late. So that's why there wasn't a video yesterday. Okay, right toolbox, wrong job. What the heck is the Rumpled One talking about today? You ever been to a job site where they're building a new building or home? You see there's different workers out there. You've got carpenters, plumbers, you've got the electricians, you got the guys that do the foundation, the concrete, the block work. You got the drywallers, you got the painters. You got a whole bunch of different guys. And they usually have a toolbox. But you see, the thing is, the electrician's not going to do the carpenter's work or the plumber's work because he has his electrician tools. And the carpenter's not going to do the electrician's work because he has his carpenter tools. So each guy has the right toolbox for their job. So they won't do the wrong job. What's that got to do with trading? Okay? Well, I know it might be stretching the analogy, but you see, in fact, I think I wrote this somewhere on a forum. Trading forum. There's many tools for trading. Some of them are squiggly line indicators. I personally like horizontal lines. I like gauges, digital gauges. Other people like different things. Everybody has different tools. But the thing is, they try to trade all the pairs. But see, all pairs don't actually have the same characteristics. Some move further than others, some move faster than others. It's just that simple. So I basically came up with this whole concept when I was trading stocks. You had penny stocks, dollar stocks, stocks in the $10 to $20 range, stocks over $100, stocks over $500. Well, the thing is, they had different characteristics. So someone asked me, it was either via email or in a forum, about the buy zone and where to set the lines. And I said, well, I can answer the question, but and I told them where to set the lines, but there's something more important. The buy zone is a tool. You have to select the right job, in this case, the right stocks, to trade using the buy zone. Because some stocks don't move, 50 cents or more from high to low. They don't have that kind of range. They just don't. And so using the buy zone, it's the wrong tool. So I said, yeah, you can use the buy zone, but then you have to use what I called my milk the cow checker. Because that's the one that tells you what are the best stocks to trade using the buy zone. And of course, depending on your account size, you might want to trade a stock that costs less per share than other ones. But we're really talking about Forex, but the same principle applies. I mean, the beast, the pound yen, that moves like crazy. You might not want to use the buy zone for that. On the other hand, you might. Now, the euro dollar, on the other hand, or the dollar yen, they have a whole different trading. They don't trade as fast. They don't trade as furious. They don't have the same range. So you might be able to use that tool better on those pairs. So let's just go through the charts here. I think I've made my point. If not, feel free to ask questions. So we started out the week as always looking for the gaps and the weekly open, and there's the weekly open, and we can see prices cross the weekly open to the downside. There's the weekly open. This is the weekly open 1 week ago. You can see price even crossed that horizontal line. And we're looking at weekly charts here. So let's go and look at the daily chart. And you can see here, once again, that buy zone trade I was just talking about. We're using the euro yen. Had a nice upward movement there. And if we wanted to look at it on the H1, here we go, right here, right from the get-go. Let's see, let's drop down to 15 minutes. Here we go, there's the open. It went, triggered upwards, or if we actually want to look at it on the, where is the buy zone chart? It's here somewhere. Here we go. You can see here, it took off from the get-go, never had a trade trigger short. If you didn't take your profit, you had another opportunity here and a final opportunity there, and you see what happens. So, very simple tool, statistically proven, and it just works and keeps on working. So let's put this back where it belongs. I believe we use this the daily. And once again here, it entered the wick zone, exited the wick zone. And I believe we can show that right here. Entered, exit to the downside, exit to the upside. Once again, wick zone. Price doesn't like to stay in the wick zone. It usually exits. This is the daily wick zone, but you can see here, yesterday we had some huge wicks. So that being said, probably today wasn't a day to use the wick zone. It's because based on what happened yesterday, you can see these huge wicks. So you might want to use a different tool when you were trading today. But it still worked. But you see here, there was just a lot of pips. Oh, what? 43 pips between the open and yesterday's open, yesterday's high there. That's a lot of pips just to be sitting and watching. So there might have been another tool, the buy zone. That was I gave it away, right? That you could have used. So the tool, the rat zone. Once again, just a tool, one that works every day. And as you can see here, it popped out of the rat zone a few times. Put in the daily low right from the get-go. And there's 1, 2, 3, 4 opportunities to trade the green rat zone. And this is just a standard, I would call it my basic chart. I want to switch it over to H4. I want to talk about H4. When I first started using MT4, I thought H4 was kind of silly. Because remember, I was coming over from stocks and TradeStation and eSignal. I don't believe they had H4 candles. And I thought, it's like, why would you have an H4 candle? But when you think about it, it splits the day up into thirds, each third having 2 candles. And each third, in a way, represents a trading session. So you've got the Asian session, followed by the London session, followed by the New York session. And it's not perfect. There's overlap in the true sessions. But just as a crude look, you can see here that there's basically 6 of these candles per day, and if you put 2 candles per session, you get the 3 sessions. It's just a way of looking at it and interpreting what you see. Once again, we're talking about tools for the job. Now, earlier I discussed turn trades a few videos ago, and I showed, how to do the turn trade. And so once again, the turn trade is basically just a tool, the idea, but the thing is, the idea is grounded in fact. Once again, if you have a red candle here on the bottom followed by a green, then that indicates a possible turn. Now in this case it was a huge turn, and then it went the other way. But see, that's trading. Not everything is going to work exactly according to your plan. It's the market. There's other people involved, other brains and other bots doing their own thing. It doesn't matter what you do. They're going to do their own thing. And so you see here again, we've got a red followed by a green. And right there, price broke that high, came back and tested it and broke it a second time and took off. And up here, we've got a green followed by a red. And you can see here, price just tested that level a few times, finally broke down and headed south. But you see here, this is just a tool to identify a possible turn. Sometimes it works, sometimes it doesn't. Sometimes, like right here, red green, possible turn. It struggled that first time. Maybe you took a little heat if you didn't stop out, and it came back here. It's like, maybe you said, I'll just take the few pips. There's always another trade. And then right here is you had an opportunity to enter. Maybe you took a little heat. You stayed in the trade. And you could see you'd be in profit once again. This happens every day because you can't have a change in direction. Dare I say trend? Oh, I know that's like me. That's like a four-letter word to me, trend. Because it's only in the eyes and the mind of the trader. It's the only place it exists. But if you can see here, we had a shift in direction and the sellers took over, and now it looks like the buyers are taking over. Very simple. I make these videos and it's like I feel like I'm repeating myself because I am, because that's what you want to do in trading. You want things that repeat so you can then use them to your advantage, and so you can profit. Now let's see. Once again, and the other chart was just without some of the, I guess, doodads or chart porn or whatever other derogatory term people want to label my indicators. And you can see here we've got just simple horizontal lines. Once again, if you use that 3-level ZZ, some people like to disparage. You can say, well, hey, price put in, so let's take the let's buy here. Oh, put in, let's go short here. And once again, it's something that repeats, because if you think about it, trading for the most part, what do? We come up with an idea, a plan, something we see, something that we believe will repeat. So if we see it again, then we do it again. It's pretty simple. You call that pattern recognition. So once again, traders, let's get the right toolbox for the right pairs or the right job, and let's go out there and start exiting trades in profit rather than loss. And as always, it's not what you trade, it's how you trade it. The Rumpled One is signing off to go drain the banks.